With the Nasdaq Golden Dragon wiping out $100 billion, I mean, just goes to show how jittery investors still are.
Yeah, and also the concentration of the selling. Where is it? Who's selling? You know, these are the kind of questions that we're asking right now. Where does the selling come from? When you look at onshore indexes, the grind lower has actually been quite slow. Implied volatility is incredibly low. Even historical volatility is low. This is not kind of a brutal, panicky sell-off. We're seeing that action in stocks that are owned by international funds, U.S. funds. These ADRs really bearing the brunt of the selling. And if you look at the MSCI China or the Hang Seng China Enterprises Index, it's really kind of tech that's dragging it low. This is kind of the reopening favorite play. Also the AI craze. Let's not forget. JD.com is the worst performer this month. So really it's kind of a sentiment-driven emotional market. We talked about this yesterday, and I've been kind of hammering this home. The economy is performing better. Earnings are improving. So what is really kind of undermining sentiment right now? You mentioned geopolitics. Yes. It's also, I mean, people are kind of clutching at straws. There's kind of trying to find reasons to sell. And, you know, someone in the U.S. messaged me just this morning, is there a COVID resurgence in China? You know, it's the kind of things that on the ground, you know, you kind of question, does this make any sense? But when you're so far removed from China and so far away, based in New York, that kind of selling pressure is really, really accelerating.
Yeah, and it doesn't matter, right? To your point, that if this market even looks like a 10, like, you know, if your emotions are there, you know, you're going to swipe left, as we were pointing out yesterday. A couple of things you're watching today, like, we formed a death cross on MSCI China, I believe. If you went long on the SOEs, that's a good example of a haven that really played ball if you went long on that space.
Yeah, exactly. Not the kind of attractive, glitzy tech companies. Those are not performing well. It's really the SOEs, and I'm looking here on my screen. It's PetroChina, life insurers, banks, China Mobile, SMIC. These are, incidentally, a lot of these are sanctioned by the U.S. So it means that U.S. investors really face restrictions when investing in these. But they're the ones that are top performing this month. I was also just looking on my terminal here. When was the last time the MSCI China Index fell for 7 days? And we would have to go back almost exactly a year to match that streak. So it's really kind of a grind lower if we do get another fall today.
It's been a year, thereabouts, since that pledge from the State Council to do everything they can to support these markets. We went up and we're back pretty much, well, not completely back, but yeah, it just reminds me how...
I mean, even Alibaba, right? All the gains that we saw after they announced that restructuring, it's basically been evaporated now.
Yeah, exactly. And it's about supporting the private sector. You know, how do you actually do that? We could get some indications out of the Politburo this week. It's been more than a year since the pledge to keep markets stable. And it was March last year where we had that kind of coordinated pledge to support sentiment. So let's see what would really support sentiment right now. I mean, I don't know.